I'm an absolute connoisseur of a good clickbait title, and here's a good one from the Toronto Star as always. Toronto area home sales surge 40% in November as prices start to edge up. I gotta tell you, the use of the word surge to describe the current market right now on the ground floor, a bit of a stretch, just a little bit. But anyway, let's talk about it. As always, I'll give you the seasonal stats. You'll know exactly what's happening, and you'll have a good idea of what's happening in the next 60 to 90 days based on seasonal trends and what happened in the month of November. How's the market? My favorite question. And to answer that, obviously, it's going to depend who's asking. So if you're a seller of a freehold property, so detached or townhouse, I would say the market is okay. It's improving, especially over the last 60 to 90 days. We've definitely seen an improvement with some of the big rate cuts that we've had. And I do believe 2025, we're going to have an early spring market, just like we've had in the last few years, ever since COVID started. That is to say, nothing sensational. At least I don't believe we're going to see any crazy surge in prices. Surge, there's that word again. However, I do see it improving. Now, if you're a seller of a condo, especially a condo downtown, the best word to describe it is likely brutal. If you don't have to sell, don't sell. And if you have to sell, then just prepare that you're not going to like the price you're going to see, because prices are trending down and I don't see an end to it just yet, especially as we're going to see more completions for pre-construction units coming live in 2025. And inventory is still relatively high. So for condos, not so great. Now, how's the market as a buyer? And I would have to rate it. It's 10 out of 10 for buyers. It's pretty much fantastic, as good as you're going to get. You can really push your weight around right now. Even lowball offers are not going to be ignored. I mean, unless they're completely unrealistic, but sellers are happy just to get an offer. So at this point, it's an opportunistic time for buyers, I feel, especially if you're okay with purchasing something that is not turnkey and you're willing to put in some work. So from that perspective, great buyer's market right now. I do expect it to last into January at the very least. And how's the market as a real estate junkie or as a bystander that maybe enjoys watching the odd train wreck? From that perspective, I would have to rate it as a 6.5 to 7 out of 10. We definitely have our issues right now happening, especially in the condo market with assignments. A bit of a mess there, so lots of drama, but we're not going to go there because that is not relevant. There's no deals in the assignment space anyway, as far as I'm concerned. I think all the deals are in the resale market. Last month, I made a prediction. I stuck my neck out. I feel it's important to do once in a while. And I said the market in November, I believed that it would be flat. And here we are. We actually dropped to the tune of like 1.7% between October and November. So as you guys know, the thin black line right here is the seasonal norm of how the GTA market behaves over 16 years. And the dotted black line is what's been happening in the month or in the year of 2024. So November we dropped. At face value, I was wrong. However, let me explain. Let me give you my list of excuses and then you decide if I was actually wrong or right. So detached homes month over month were actually up. So for detached, this exact same graph would actually be up across the GTA. Where it's not up, semis are down, condo townhouses are down, condos are flat, except downtown condos getting decimated, as I had mentioned earlier. They're down to the tune of like 7% month over month on median prices. And then townhomes, freehold townhomes, they're flat. Overall, the condos and the condo towns have been dragging the prices down, but detached or freeholds are actually flat and up. The bias I have, obviously, is because I work with a lot of freeholds. I kind of focus my attention mostly on that market. So I was wrong in thinking the entire market would get pulled up, at least by the performance or the good performance of detached. But I guess I was wrong in that sense. It didn't. The condos dropping substantially month over month was enough to drag prices down in the aggregate by, over 1.5%. Now, this makes our predictability of the future a little bit easier because our graph is now following seasonal trend pretty much on par. What's going to happen next month? Likely the same thing. Overall, median prices are going to go down. I still expect detached to continue doing relatively well, meaning maybe detached will not go up next month, but it's going to stay flat. And then going into January, at that point, I do think it may actually go up. So we'll see about that. Month over month, aggregate median prices have gone down. Because I'm not done making excuses as to why I missed the mark for my little prediction there, I want to give you a bit of context as to the heat map and different technologies that we use in the back end, or at least some of us, when we advise clients, because it's very difficult from an aggregate video to tell you how your neighborhood or what's going to happen where you live, because this is what we're dealing with. So here we have Highway 400 right here, and then this is the 401, Black Creek. I have a listing in one of these areas, and what ends up happening is you will see, for example, right here where it's yellowish, prices have dropped to the tune of like 3 to 4% over the last 12 months. But then you'll go a little bit west, prices are up 5%. You'll go south of the 401, prices are also up to the tune of like 5 to 10% over the last 12 months. Then you go right here, it's yellow, this is where prices have been flat. So when we talk about the market at large, it's very difficult to kind of combine all of this at the same time and try to figure out what's going to happen in the aggregate. So these videos are for directionally to show you what is happening. But as you can see, you'll have areas that do well, areas that don't do so well, etc. Just some back-end information, so you guys cut me some slack if I'm wrong. In the right column is the median price for detached for November, and on the left is the median price for October. So as you can see, median is higher in November, and that's pretty much across the board. So Peel, Halton, City of Toronto, and as well as York region, across the board, everybody is up, which is against seasonal trend. Now we're looking at condos. Once again, median price for November is on the right and October is on the left. In general, condos are doing okay if you look at Halton, Peel. But then once you get in the City of Toronto and you start looking at Toronto Central, this is where we're at 640, and last month we were at 665. And then once you break it down to CO1, which is technically downtown, that's where it gets gnarly, where drops are almost close to 7-8% month over month. Case in point, right here, if you look at Toronto CO1, 638,000 for the month of November and 685 last month. So that is a substantial drop. Whereas Toronto West was actually up month over month. Toronto East, same thing, up month over month. So this is against seasonal norms. So back to my prediction, I saw a bunch of these properties and areas and different property types actually trending up, but downtown Toronto condos really skewed the numbers down because of the substantial drop that we saw month over month. In terms of prices over the next 60 to 90 days, I expect more or less of what we're seeing right now. So slight improvements. Again, we're not back to seasonal norms. I don't know if we're going to follow seasonal trend, but we are going to be improving. The one thing that's interesting is even though we've had a bunch of rate cuts, as of right now, some mortgage rates are actually going up as we speak, not substantially, but again, I think the lowest rates that were available 2 to 3 weeks ago are no longer available. That being said, December 11th, the next policy decision, right now the probability of another rate cut of 25 basis points is 93%. So we're likely going to see another one. Will it do something? I don't know. Again, it always matters what actually happens with mortgage rates. And right now, some lenders are coming back relatively aggressively trying to lend on residential real estate. So you're seeing some promotions. We'll see how long that lasts. It's kind of like the wind blows one way today and then tomorrow it's something completely different. But as of right now, rates kind of bottomed out. Mortgage rates have bottomed out, but we are probably going to see another rate cut. When it comes to new listings and absorption and sales, things are trending in the right direction. As you'll see right here, new listings are still higher than where they should be, but at least we're following the trend line and we're likely going to meet right where we should be for the month of December. The other good piece of news is that absorption, once again, is still higher than where we've been. So here is the gap in absorption we've had for the last, call it 8 to 10 months, where we were selling 30 to 40% less than we typically do. And really in October, things really picked up. The gap is much smaller. We're selling a lot more than we were selling just a few months ago, and it's continuing into November. I'm seeing it. Ultimately, what it's showing is that there is liquidity for sellers out there that are coming on the market at reasonable prices with decent homes. So that's what this is showing us. And I do believe in January and February, this is likely going to narrow further, where we hopefully get closer to seasonal norms. So we'll have a nice, healthy market again. And for our active inventory, things are still not very good. Usually, I would be pretty confident that I would see a massive drop off in listings going into December. At this point, I'm only seeing it on the detached side or the freeholds where people are terminating and they're going to relist likely in the new year. But condos, especially a ton of vacant condos out there, there's no point for them to terminate. So they're just keeping everything on the market. So likely we're going to have higher than seasonal active inventory at the end of 2024 going to 2025. I don't know if it will impact things outside of the condo market. We will see. I think this is the divergence. We're going to really have two markets happening here. We're going to have condos, in particular condos downtown, and then everything else. It's going to be two very different markets, two separate stories, and two different things to kind of watch for. I hope you enjoy this, and I'll see you in the next one.